Hello and welcome to another update video about ADA. The ADA chart continues to be in this diagonal pattern to the upside. That's unchanged, so completely unchanged situation here on the 4-hour chart. Yeah, when we zoom out, you see it. That's still our perspective that in June, a wave 1 to the upside started. We had a wave 2 pullback, a wave 3 to the upside. Then basically this wave 4 pullback here into the January lows, and the wave 4 might be complete. It always takes a little bit longer when we're dealing with a diagonal pattern to confirm that a low is in place because of the structures and, there are certain things we're looking for. But when we're dealing with a diagonal pattern, yeah, a lot of different options are available, okay? And the market can take quite a few different routes, and we want to avoid that really, that we call a low in place too early. So it takes a while to confirm it, but I'm already assuming the wave 4 bottomed here until support levels break. So what we can do then strategically is to just add a micro support area and follow that, and that's what we're doing. I'm going to talk about that in a minute. The idea is, yep, wave 4 might have bottomed and wave 5 could be unfolding. That's the main thesis, regardless of whether we make another low and then go up. But the diagonal pattern is basically the main thesis. So let's go to the 1-hour chart. And here you see the corrective structure that we're dealing with at the moment. So this wave 4 pullback, basically. The wave 4 might have bottomed here actually on the 23rd of January. That's what I said. And that is sort of what we're tracking right now. But there is a clear condition to keep going with this scenario and to keep this scenario basically alive. I need to see that the market in the current pullback is holding a wave 4 support area. So this support zone, which is between 52.9 cents and 56.9 cents, should ideally hold in any pullback. In diagonal patterns, pullback can be deeper. So I always allow for the golden ratio level as well. Normally in an impulse, I wouldn't, but in a diagonal, we have to. And also as a side note, in diagonal patterns, we have to just give them more space because the support areas are very fragile. I wouldn't, don't treat them as very, very strong support areas. Ideally, the price doesn't break them. But technically speaking, because we're dealing with a diagonal pattern, a wave 4 could technically go all the way down to the wave 2 low. Now, I wouldn't call that a wave 4 anymore, which is why I give you a support area. For me, the likelihoods and probabilities, they already shift towards something more bearish in the short term if the 52.9 cent level is breaking to the downside. But at the moment we're above that level, and yeah, as long as we're above that level, I follow the yellow count. So what is the yellow count? It is suggesting that we're dealing here with this diagonal pattern. Wave 4 bottomed here likely on the 23rd of January. We take it level by level because we're dealing possibly with a diagonal in a larger diagonal. Okay, there are always different options. So, it's not a high confidence wave count. I have to say that as well. Be prepared for potential wave count changes. So far, we haven't had to change anything, but it is, for example, possible that if we only get 3 waves up, that this here is a larger A wave, we get a B wave, which is a little lower, and then a C wave up. That's possible, which is why I highlighted when we went into the wave 4 support region, this support region as the space where it might be reasonable to look for potential entry points, because anybody who entered in this area basically just now needs to do one thing, which is manage risk. So support area is defined. If we form one more high, where should the price be landing? So you can see that the third wave there in yellow reached beautifully the 1.618 extension level at 64 cents. And that level provided some resistance, not only the 1.618 extension, but also the structural resistance levels that we had here. And above that level, 66 cents, 68.8. So as I said in the last video, but also on Telegram and Discord in our updates, this area now above 64 cents, all of this between 64 and 68.8 is a resistance area because we have important Fibonacci extensions and resistances. But in addition to that, all these previous swing highs can act as resistances as well. So the market got rejected in an ideal area. Now, if we get that wave 4, fine. Then one more high in wave 5 to possibly 66, possibly 68.8 cents. That would be ideal. Then we have 5 waves up, then another pullback, then another final rally to form this wave 5. That would be ideal. Okay, if we break below certain support levels, then it's very likely, one second, just shift that, then it's very likely that this fourth wave is still unfolding and the yellow zone might provide another opportunity to look for entry points to basically trade that fifth wave there to the upside. I think that should give you everything you need to know. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.